Good morning, everybody. It's March the 6th. It's Friday. It's the end of the week, and it's probably the month's biggest news day, unless there's some surprise announcement like wars coming out. The ECB announcement is behind us. That's been absorbed by the market, and so now we are dealing with what will the unemployment numbers be. So unemployment is supposed to be 5.6. Non-farm payroll numbers at 230. Private non-farm payroll that nobody pays any attention to, 225. Hourly earnings plus 0.2. There will be extra scrutiny to see if wages are starting to pick up after all these job gains we've had since November. And then average work week. The way you double check the non-farm payroll numbers and if they're getting bigger is with the average work week. And it's where it's been for quite a bit at 34.6. So the focus will be, number one, non-farm payrolls, number two, 5.6 unemployment, and then will be some attention paid to hourly earnings. There is no liquidity when this hits the market. And that's why you have these great big price spikes. Large institutions are on the sidelines. The trading community comes back in and they try to game it for a little bit. But what you'll have is that you'll have the first reaction to the news. Then you're going to get some retracement. And the mode mean in the middle, buying, leaning against that, a tick inside, wherever that happens to be. In the first bar will almost always get you in. Then value area low or high. And then where the news hit the market. Usually you can't get back to where the news hit the market until a couple of 3 hours later. So you always have a chance right there. Because of the illiquidity, what we recommend that you do is don't take a position in front of the news. Trade this first direction, and then if the market does not exceed this level right here, you exit the trade in a development. Now, this requires a nimbleness. You have to read and assess the data pretty quickly, and that's usually beyond the skills of a novice or beginning trader. For you, those two that don't want to take that risk and can't make decisions that quickly, what you'll find is the market will make its run. If it does extend the range, you've got that first correction. If it doesn't extend the range, you'll come back down. You'll usually be inside that first correction. Then you'll be inside that rotation up, and this is called development. And on the note, you can usually trade development plus or minus 230 seconds. On the bond, sometimes 6, but usually 4 to 6. So that's those are your choices right now. So taking a look at this market right here, top value is 3. Got a 4-letter ledge at 4.5. We do have the overnight session high at 5.5. So your first little band up here of resistance is going to be 3 to 5.5. Your second band is going to be in this 7 to 8.5 for resistance. Then it's 10.5 to 13 for 3, and then 16 to 20. Now, depending on how close the news is to the actual forecast, a resting limit buy or sell 16 to 24, 30 seconds away from where the market is as the news hits is another way to play it. And you're going to fade that first move, counting some profit taking. On the support side, we've got the Well, we're really at it. So we'll take a look at this 29.5, 28. You got this F period low down here at 26. You got that low, so 23 to 26 would be your second support band. Then you've got 18 to 20 and 12 to 16. So that's where we are on the note. And it's a newsday trade. I mean, that's all you can say about it. So if you do have money in the account, if you do have a bottom line, if you have a strong feeling about the market, if you don't trade your full size, cut it in half, cut it by a third, cut it by 80%, something like that. And a lot of people will take that. I mean, you got to be in to win, and you can assess the risk. It's nice to do that. It's a confidence-building maneuver. You're backing your idea. You're backing your trade. You're doing all the right things, and you're managing the risk in the appropriate way by reducing the size of your trade. Okay, looking at the 30-year, and we take a look at where resistance is. We've got a B pattern, so there's been some selling, so people are playing for a number of 230,000. We've got value that is developed in this 24 area. Now, a scoop order on the 30-year is 1 point away for a limit buy or a limit sell. So when we look at where the market is right now, we've got value at 24. We've got a 25, 26. We've got an S high at 27. Then we got our 4-5-letter ledge at 28. So that's your first band of resistance. Your second band of resistance is 59, picking up in over here to 3. Then we've got our 8 to really 12 for 3, and then 16 to 20 for 4. Looking at the support side, we've got 16 to 18. For 1, we've got this I down here, 14. We got our 4/5-letter ledge value area over here. So we've got a 12 to 14 for 2. It's pretty tight. Then we're down to 3 to 6 for 3, and then 58 to 57.24 for 4. And trading development in this one is plus or minus 4 to 6 ticks, 30 seconds. And again, on a newsday trade, you've got that first reaction. This time we'll make it to the downside. You're going to get retracement. You got the mode leaning against that. Almost always will guarantee you a fill. And in this case, you got the value area high. And then you got the point where the news hits. And this one will almost guarantee a fill. If we don't take that low out, then you got to cover it. If they take the low out, you're looking looking pretty smart on that. So that's the way that you handle a newsday trade. Again, if you want the full benefits of that particular trade, cut your size down and put your trade on right where the market opens. Put a disaster stop. Well, you can't even really trade with a disaster stop. You just have to take yourself out. Usually $1,000 in a 30-year. There'll be a pause right there, so you're looking at a potential $1,000 loss. Okay, a non-farm payroll number of 230. Unemployment of 5.6. Should take gold a little bit lower. Coming in last night, we like this 90 to 95 area. Got a little volume down here at 87. So 10 points away from where we are right now, a scoop order in this 85, 87 area for a limit buy. and then 1205, 1208 for a limit sell. And this one can run a lot more than that, but that usually you get a $10 move off this news. So your first support is 90 to 92. Second support will be 85 to 87. Third support will be 80 to 82. Pick up the slow volume number down here. And then our 75 to 77. And if you just wanted put something out there on a what the hell, a limit buy at 76, meaning against that very round number 75, would be where you could put the order. Okay, resistance, we stopped at 97.70, stopped at 98.70, we got 1200, so 98.99 is your first resistance. Got a G high here at 01, you got an F high at 3, so like 3 to 5, 2, 8 to 10, 3, and then 15 to 17 for 4. Let me copy those numbers down. We'll see how they play out. Okay, the euro is just getting bashed. We're starting to see more press about currency wars. We're starting to see more press about how it's going to affect United States companies' revenues and earnings, those that export to Europe. Naturally, no one wants to lose their competitive advantage. So here we are. So we've got a low 30 just above our 25. We're at 69 now. The number 230 is built in as 5.6% is built in. So greater than 230 should take the euro down. Less than 230 should rally it. Greater than 5.6 should rally the market. Less than 5.6 should hurt it. Pretty clean makeup here at 1010, this area right up in here. So if you're to take out 1010 would set up a pretty good short. That'd be 30 to 40, 50. Anything 50 points away on this one is a good place for the market to pause and take profits. So we go out at 70, so you got a 20 limit buy, and you've got a 20 limit sell on this one. So first resistance is going to be in the 75.80 area. Then we got all these single prints up. Basically at 110 will be 2. Got the spill in London at 1010. Last rotate up, so 10 to 20 would be our third area. And we'll just make it 40 to 50. 950, 1, 30 would be 2. Then 109 period would be, and someone's going to take profits at 109. It's just the way that it is. And this market can react pretty strongly to the unemployment numbers. Not as much as our financials in E-mini, but it can give you a pretty good run too. Crude won't play to this. So crude's got its own fundamentals. Yeah, if it comes stronger, it might rally a little bit. If it comes in weaker, it might go down a little bit. But it does not have much influence on what's going on. So we've got 50, 50, 50, 65 for buy 1. And basically 50 for buy 2. If it stops below 50, 50 is a round number. That's where we'd really like to engage the market. On the upside, 51.25 to 50, sell 1, and 75 to 52 for sell 2. So this you can play and not worry about the unemployment numbers. Okay, the E-mini. You know, the economic news is, most of it misses. They say about 10% of the macroeconomic news that hits the tapes is better than forecast. So what the people will do when they look at this, a 230 number is supportive. That's a plus. That shows that jobs are still being created. Once this number is over 200,000, it'll trade down, but as long as it's greater than 2,000, it can come back. And it'll come back because number was weaker than forecast. Fed will have to raise interest rates later rather than sooner. Citicorp came out saying that Europe's quantitative easing will add 30% to the European stock markets over the course of the next year. So we've had Japan do quantitative easing. We've had the United States do quantitative easing. It's helped all markets around the world. The European started their QE program. I believe actual purchases on 9th will help support this market. So just by definition, quantitative easing is supportive, or you think it's going to be supportive. You won't get short until you see failure. The 5.6 number, if it comes in greater than 5.6, the Fed will raise interest rates later than sooner. So you'll probably get some buying off of that. If it comes in less than 5.6, Fed can raise interest rates sooner. But the real numbers is non-farm payroll number. Since November, they've been adding 335,000 jobs per month with the upward revisions. Any disappointment in these numbers will be blamed on the weather. And we had a pretty mild weather up to January, and it's been it's been very wintry since February on in most places. So they'll have an excuse. And then when the dust settles, they'll look at how these numbers were derived, and they'll see how much statistical smoothing was required to come up with these numbers. And that's where the long-term player will start to make their bets. So just looking at where the structure is right now, this 5 area plus or minus 3 to 5. If we didn't have news, would be where our first, say 4 to 6 would be our first sell. And then 9 to 11 would be our second sell. On the buy side, 95, 97 would be buy 1. And then 90, 92 would be buy 2. But we do have news. So a 10-point limit buy, limit sell usually gives you a little wiggle room. If you don't like the news and you're on the wrong side of the market, you can usually scratch that trade. And that's what we have for the news today. So we'll see what the numbers look like. Upon their release, if you know the news, you've got the trade. There's no way to get around that. It's a trade that carries a lot of risk. But if you do have a bottom line, you know how to make money and the rest of it, and you got a strong feeling about the news, then you can take the trade. And you'll be smiling from ear to ear. You won't be too happy. It's just the way that it is. It's part of trading, though. And I remember Pete Stedelmeyer used to tell me a long time ago, he says, Charlie, you all will learn to trade into news. And if you're a little bit wrong, you'll just learn to add to your positions. Now, Pete said that coming from the grain pit. And the grain pits are 5-month markets. And you'll have supportive weather one day, a couple of days later you'll have negative, and so you can do that on that. You can risk $1,000 on your financials, and if you can risk $500 to $1,000 on an E-mini, you can take trades or positions into the news. And if you don't want that kind of rest, you can't do that. So it won't take too long to get everything up and posted. We'll be back for the news announcement. And I'm going to get the stuff that I have to get done. I'll be back with you on the news announcement in a bit.